12/9/2020. What do we have? We have that S&P 500 opening bell, and you can see it right here in that Phantom Quant. Not only that, we're looking at the relationship of an overbought S&P, what we refer to as the snap trade. When you get hidden, as we did the live video trades yesterday in the S&P, as they were running them up. But when you do start hitting 99.9 and 100% overbought, we call it the snap trade. And then we call it where that great news that everybody keeps talking about isn't so good, maybe. It is good, but to verify the snap is when you get to such overbought levels that you come straight down in this delta tree. And we did hit again on the daily behind me. On the daily. Here, let's make sure this is everything is in the video. This is the daily of the S&P. And on that daily, once again, that percent D and percent K there this morning hit 99.9%, 99.8%. And we hit those stochastic readings. And once you hit that exuberant mark, we call it the snap trade. And then when we go into our app that you see is the snap verifies when you got to come down into the delta trees. Right down here is another 25 points to get to that 36.72. But for us to confirm the snap, then we need to come down in this delta tree, the negative delta tree, take out all the stops, create volatility. Volatility happens at market tops and the processes and a 13 IR. And when the IR was at 0, S&P at the bottom. Oh, believe me, it will have the attempts to go up. But this whole opening bell is based on the snap trade at 99.8% on a daily percent K stochastics that get up there, that at some point within the bull run with their algorithms is that their algorithms change and cross the bid, and then we get what we call volatility, as we call it. But you have to have in both sides is a confirmation of what we call reversals. And we had 1, 2, 3, 4, 5, 6, 17, 18, 19's down times $1.85. And that's to the downside mathematically. Now, when we measure what that reading is like, then we're going to watch to see what the power of that algorithm is coming right back up, because it works both ways. And we can clearly see that that is what's happening there. And we can clearly see that the top, what is now, that stochastic is only at 92. It's not at 99.8. Now that we know that on the daily, and what that response was, is that S&P quant will still be in the marketplace. And it will. And it's an algo driven, and they work both ways. The part that we're focusing on is the relevancy of the upside algorithm versus the reversal side of the algorithm at the extreme overbought levels, whether it be the S&P or any of the stocks. The same rule will apply. So As we clearly see, market tops and the values of deflated values, and we'll cover the call charts and the put charts. And why is it that at some point that snap, when it snaps, and it will, but it snaps from a series of overbought levels. And then within the overbought level zones, within the algorithmic structure of a 47-minute opening bell, 47-minute opening bell and directional movements in trends. That's a word the public understands. In this system, it's algorithms. So mathematically, it's $1.85, and you can see one, two, there's the third teeny, there's the fourth, there's the fifth teeny to that bullet. Mathematically times $1.85. 100% correct. Can't deny it. There it is. Now, that IR at 52, if P doesn't go above 55, then we will not get above these two diamonds. And this is live, and it's here, and it's right now. And that these diamonds are going to be resistance. So when we come up off of the bottom mathematically, 5 teeny script times $1.85. I know it's amazing, everybody, but it's very true mathematically. Let it be known. Now, the next phase to price tops and exhaustions in exchange models is this number here has to be contracting in value, the IR in the Panther Quant, and then going down toward 0, 25, but throughout the trading day and the opening hourly bell is where do we know beyond a reasonable doubt of where a change in price will or will not be? We do. And this is what the opening bell on the S&P and understanding the strength of algorithms that are used in the exchange model and have been for a number of years. It's just that the intensity of them has increased and their technologies, but they can never escape Panther Quant as we see it. So now we understand how to gauge price and what that price will look like at the end of the day, or 2 hours from now, or 3 days from now, or 1 week from now. And what the verification model is coming back down in the negative delta tree and taking all of these out. And this is what bull market runs do, is they do have to come in and take them all out. And there's a processing price of the hourly opening bell right now. It's 12/8/2020 price identity with Panther Quant and the exchange model on the S&P 500 index opening bell at exuberant highs, and what those highs look like and what price looks like, what the IRs look like, what the bottoms look like, how strong are they, how to gauge them, how to remove the emotion, whether it's on the S&P 500 or Amazon or Shop or any of them, is overbought market and the change that has to happen and how to read that change in the heartbeat, and why do you get paid on it, and why do mathematical imbalances from those levels have to recalibrate.